Welcome to Markets Now. I'm Michelle Rook along with Jeff Hoogendoorn with Professional Ag Marketing. Well, grains have been quiet but are starting to drift a bit while the livestock futures were higher in cattle. We started off with a little strength in the hogs, but that's starting to wane a little bit here as well. We're seeing mixed trade there. Let's start off with the grains. We'll get that out of the way. Not a lot to talk about there, Jeff, just because we're kind of gearing up here and waiting for these reports to get out of the way, aren't we?
Yeah, I think so. I think everybody's, in my mind, that's what we're doing, is just kind of getting ourselves into position for the acreage report, which I do think will be a big deal in tomorrow's trade, of course. I also, you look at like this May corn, been pretty strong. I think that's really goes back to the Chinese purchases and or sales that we've seen here the past few weeks. Another one of them this morning, of course. I definitely think that matters. They've been very consistent here. They're really starting to add up a pretty good tally of bushels there. Certainly, that's supporting the front month here more than say new crop, but
Yeah.
that makes a difference too. But end of month also coming up here, so.
An end of quarter, and it always gets a little wacky when we have that happen. So we'll see. We've also been hearing that maybe there was some China business on soybeans that was switched from Argentina to the U.S., and you saw the forward spreads kind of working yesterday. Maybe that was an indication of that.
Yeah, I think that's probably true. And there too, we started out the day in pretty good shape on the beans.
Yeah.
I think that's all part of that type of discussion as well. Currently, we're lost some ground here.
Yeah, and we've also run up into chart resistance here in both corn and soybeans on the old crop category. Even new crop corn, I think, yesterday hit resistance up at these moving averages, didn't it?
Yep, that's probably fair. There's some moving averages and some retracement levels that are getting in our way here, depending on which months you're looking at. So that's probably all fair. I mean, it's just there's going to be a hard time wanting to push through those type of levels, even if they're not super significant. When tomorrow you got the acreage report's going to probably drive the market at least 20 cents one direction or the other, right?
Yeah, it could be pretty volatile. So let's focus more on the livestock then. First of all, cattle, fifth day up here. The funds have been back in here buying after their liquidation phase. So it looks like cooler heads are prevailing. We're kind of putting that banking crisis in the back rear view mirror, aren't we?
Yeah, I heard somebody else say this earlier this week, and it seems like every day that you go by without a bank going broke is a good day. And I think there's a lot of truth to that on these outside markets, and cattle being as closely tied to there probably as any of them. I haven't really been able to come up with excuses as to why we had that. What was it, a $5 to $6 drop, Michelle, after the banking situation? The fundamentals obviously didn't follow through with that lower mentality, right? So that almost had to be entirely liquidation, maybe a little bit seasonal.
You bet. But it looks like there's lots of expectations for higher cash trade this week in the cattle. The question is going to be how much, and that's kind of seems like it's fueling the rally. I did see some 165 bids kind of circulating here.
Yeah, I think that's going to be the bottom side of it. It's Thursday, so it's probably time to start looking seriously at the bids that are getting offered to you. Very impressed with the meat bids last week, Michelle. I think the prior high was like 262 and some change, and easily came in at 265 last week. And I'm fully thinking that market has to be a couple bucks higher real easy. Probably need to be even asking for higher money. I know there are folks asking for higher money than that even. So that seems to be the market to watch right now, is the kind of uncertainty through the Nebraska area on yield and some things like that. But I think it's going to be a pretty good week in the cash market.
Yeah, I think, I talked to some cattle guys too that said that they were getting their bids in the live market. And so that was really, really encouraging. So we'll see what we get out of the trade here this week. So we also have hogs, which started off the day a little bit higher, but it's been hard for that market to maintain any strength here because the funds are so short there. And so we're kind of gearing up for the Hogs and Pigs report. What are you expecting in the report, first of all? And then once we get the report out of the way, do you think maybe this market can try to stabilize?
Yeah, so the supply side has definitely been part of our issues here. It's been a head scratcher since the 1st of January, maybe back to that Christmas storm, trying to figure out just how many pigs we have around, right? Um,
Right.
I would say, our expectation of a couple percent less than last year is certainly kind of gone by the wayside here. So average guess is coming into this afternoon's Hogs and Pigs report are, 0.5% more supply. And I probably don't have any real complaints with that. I was sure wishing that we would be lower than that, of course, but recent kill activity probably suggests your better case scenario is 0.5% increase. So that's where you're kind of struggling here. Hopefully we kind of come in at or at expectations. Probably going to be one of my better expectation going into today's report, I guess. And it's just been a struggle on the supply side, no
Yeah.
doubt.
Yeah, and then cash and cutouts have been, ill performers too, and that hasn't helped. I mean, the index now keeps sliding, and we have a premium, especially in those back months. So that doesn't help either, does it?
Right. And the cutout, the futures are, I think, focused on the cutout. We've seen that. Oh shoot, was it a little over 2 weeks ago? We were kind of on track to, be in the upper 80s on product, and hams fell out of bed, and futures really got pessimistic ever since then. I think that's right. I think the cutout's still going to need to lead our way out of this thing. We're still relatively short on pigs, right? Packer margins are going to continue to be narrow, but we need to get some good news on the product values. And I think it'll come. It's maybe one of those situations where it just takes a little more time, obviously, than we were hoping.
Yeah, and you had mentioned the slaughter pace being kind of above where the Hogs and Pigs report that or estimated that we should be. And is there any one reason you can point to for that?
Um, it's kind of tough to pinpoint. I mean, you're kind of left with the USDA report had been very accurate, really, last couple of years. The few years before that, it was kind of struggle. We all know that we're all guilty of probably not putting as good of information in that report as we should. So it's possible it's just inaccurate. I don't think
Okay.
they'd have an issue with that. It's also possible. I think there's some sow health in some geographies that we've been looking at that is considerably better than what it was a year ago. I know that's not the case everywhere. There's some areas in Iowa that's really been struggling yet, but there's definitely some areas that I would say is significantly better health. So maybe it just had a little bit better uptick on some sow performance here too.
Sounds good. Well, we'll see what we get in the report this afternoon, Jeff. Thanks so much for joining us. Jeff Hoogendoorn with Professional Ag Marketing. That's Markets Now.